So we'll go ahead and get started as people roll in here in the interest of time. We have only a 30-minute interview this morning, as you guys know. We try to keep these nice and short and to the point. This is our Perspectives series, Entrepreneur Perspectives, where we interview one of our clients or one of our board members' clients.
When you were first doing business, did you have different advisors than you have now, I would assume?
Yes.
What kind of advisors did you have out of the gate? You had to have a banker.
I didn't.
I
self-funded everything. I didn't know what I didn't know. And it was funny, is not a lot of people were knocking on my door, or maybe I just wasn't paying attention, but...
You were really focused.
Really focused.
You can get really focused.
Yeah. Well, especially back then, because I think the hardest part of being an entrepreneur is the start. It's just that first couple of turns, and then you're starting to roll and you have some momentum. But in the early days, and I was an entrepreneur, I mean, I've worked for somebody in my entire life for less than 3 months. It just doesn't work for me. So in the beginning, I was just head down. And most of my 20s and early 30s were 60 to 80 hour weeks, and I enjoyed it. It was just part of the journey.
So eventually you have to get an accountant to file your taxes.
Yep.
And maybe a lawyer to draw an agreement.
Yep.
How do you bump into those first ones?
I think a lot of them is referrals. I mean, we're talking 20 years ago. A lot of it is just asking questions to people, and you almost, when you're that young, you just, for me, was just like, okay, just go to do that, and then, I'm sure they'll be good. So I wasn't like spending a lot of time vetting. I wasn't spending a lot of time asking the right questions. It was like, just handle the shit. I don't know. Can you cuss on it? I don't know.
Of course. We can bleed it out.
Yeah, okay.
Next time.
But it was just handle the stuff, because I'm laser focused. It was an error looking back as to what I would do differently. Would it be to get a group of advisors?
Well, how do you hunt them now differently than then? Then it was somebody made a referral. Please make this pain go away. Go do it. I assume you're.
So as soon as I got the referral, I took that as, okay, this person must be good. I wasn't asking any
How'd that work for
qualifying questions. One of my claims to fame is I took a company from 0 to 20 million in value, and I ended up selling it for $150,000. I mean, you have to really, really be good to do something that terrible. So but I didn't BK it, and it was when the wholesale market for lending was, so it's actually one of my prouder moments, was taking a $20 million value of a company, not BKing, selling it for $150,000 to get out from under it so I could focus in
Literally
business.
walking away with something at least.
At least something.
And learning your lesson.
And learning a lesson, and it's to your point as to if I had advisors, really any level of sophistication from an advisory level, they would have advised me a lot differently when times were good. I mean, almost completely. The opposite of what I did, they would have said to do. And so looking back, which was a great lesson in my 10 years later, was to look at market conditions and not just head down in the business, because if you do that, you either, one, better have a really good group of people that you can rely on to help keep you looking at things that you can't see, your blind spots, but it was that group of people now for me is really, really important, because I can still focus on my business, but I can rely on other people to do the things that, maybe peripheral, they give me a different vantage point.
What do you know now that you wish you knew 10 years ago?
One of the biggest things I've been surprised with was tax implication. And so this is going to probably ring true, obviously, to you, but the idea of it's like income, right? It doesn't matter what you make, it matters what you keep. And same thing with the exit of a business, it's so multifaceted from the standpoint of what are the dollars and cents that you're going to keep? What's the impact of any sort of sale on what the buyer, and so there's a component of the transaction, there's a component of the life part of it, there's a component of having a partner where, the entrepreneurial spirit as to what you can and can't tolerate, right? I talked about, I can't be a W-2 employee because I don't play really well for someone else if I don't respect them or believe in what they're doing. Well, same thing too. When you're selling, you have to understand who is going to be that partner, and what impact is that going to have on your life? Because an entrepreneur who has the shackles on is not going to be a real happy entrepreneur, and that's going to have a domino effect on the entire organization.
Casey, thank you very much for the time. Thank you all for being on. Are there any questions out from the audience?